Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. Lance, good to see you.
It's good to be here.
Lance, I want to talk today about this OIG report for fiscal year 24. I was doing some research and was looking at it, and it is let me set this up. Congress hires the Inspector General. Congress hires them to make sure the executive branch does what Congress wants them to do in terms of when they allocate money. Congress has no way to follow up. So that's the Inspector General. So even though it says SBA, they don't report to the administrator, they report directly to Congress. Also, unlike a bank audit, when the bank auditors come in, you better do what they say. This is a recommendation because the administrator reports to the executive branch, and this is simply Congress telling the administration what they want to do. So it's a little bit different than what you and I grew up with in banking, Lance, correct?
Oh, there's no doubt about it. I mean, everybody, we talk about the SBA Office of Inspector General numerous times in webinars, the Coleman Report Live, and everybody just assumes that it's part of SBA, but the Inspector General's office at SBA does not answer, like Bob said, to SBA. They answer to Congress. And, it's when we talk about concerns that the Inspector General has with peer reviews and other things like that, they're trying to get SBA to behave the way Congress wants them to behave, Bob.
No, absolutely. So the first one, and as they say, these are not presented in order. Oh, the reason why this came up is last week, the House voted on 9 bills, a shocking result in Congress that they were all 24 to zip. They were all truly bipartisan, and a lot of them was cleanup. But a couple of important things that came out of that. I'm sorry, John Riosta isn't here to add more to that, but the Small Business Committee not only is the most bipartisan committee on the Hill, it is also the most engaged, in my opinion, Lance. They get down in the nuts and bolts, and they're very, this is not a committee that, it's a backwater committee. This is a committee these people are all dedicated to, and they understand small business is the driver of the United States economy, creating more than half the jobs. So they take their job very seriously. They come up with this color gauge key, and one of the bills they voted on is anything that is not green, they want a report from the SBA on what they're doing to fix it, and they're going to be holding hearings on it. So as you can see, green we like, yellow fine, red we don't like, Lance. Green good, red bad.
Yeah, so some of these
Number one, go ahead, Lance. Go ahead. Set up
Paycheck. Well, the Paycheck Protection Program was susceptible to abuse and fraud by virtue of, Congress. The Inspector General is pegging SBA on this, but it was the nature of the program. Paycheck Protection Program got launched and implemented in the quicker than anything SBA's ever done, and it was larger than anything SBA's ever done. And SBA was tasked with helping the United States avoid catastrophic unemployment.
As Senator Rubio told us on this show.
So, yes, the program was susceptible to abuse and fraud, but, and I'm not saying this because I'm a former SBA deputy director, Bob, but I'm just telling you it's not all SBA's fault. It was the nature of the program, and SBA did what it could to avoid as much fraud and abuse as possible.
And I don't believe Congress is pointing to SBA. I mean, there's a couple of things Congress doesn't like that SBA is doing, but Congress understands. And Senator Rubio is very clear when we interviewed him, Lance. He said, hey, we knew we had to move quickly. We knew we were going to have problems and knew we were going to have to clean up some mess in the back end, and we were willing to accept that risk. So Congress is very clear about this. Hey, go to the slide on this is an interesting slide. What the Inspector General did is they said these are the fraud things that SBA should have picked up and where the fraud went. And it's all over the board. The big one, though, the suspicious email addresses, Lance. I don't know. I mean, but and look, I know a lot of you spent nights literally in the office getting these loans out. We heard stories about that. It was not a pleasant time, and the banking industry performed. The government clearly understood they cannot get this money out fast enough to avoid a depression or economic collapse, and bankers did their job. But number one was suspicious email addresses, and number two, it went to the wrong bank account, Lance.
Well, there were, being somebody who has intimately worked in the PPP loan program on both origination side with a large regional bank and the servicing and forgiveness and guarantee purchase side with a non-bank lender. There are tons of PPP applicants created email addresses for their PPP loan applications. So yeah, there were suspicious email addresses. The bank account issue, there's some simple things they could have put into place. But I mean, how, Bob, do you come out and say, well, you can only deposit PPP loan funds in a FDIC insured bank? Because that would have been one thing that would have helped this a lot. There were a lot of applicants who had their loan funds go to financial institutions that I've barely even heard of. So suspicious, and rightfully so. Some of the big banks, if a Paycheck Protection loan program deposit or wire came in to a personal account, they would put a hold on that money and return it to the lender. So I think
what's interesting for that is for lenders is SBA preaches equity injection documentation correctly, putting the money into the bank and when you disperse it, put the money into the correct places, i.e. the correct bank account. But I think with the suspicious email address, I didn't know that was that. I guess as a percentage basis, it's not that significant, but it's out there. And I think that's a individual underwriter closer check just to say, hey, is this email, is this a valid email address, or is there something strange? That what they said, quote, there were emails with a lot of dashes, they had modifications, there were pluses, they just didn't look right. I think that's one of those, does that email address make sense? Whoa, what do we got here?
Well, and some of the other things, the EIN issue, there are a pretty substantial number of Paycheck Protection Loan applicants who would get a PPP loan under a EIN set and say, oh, that was easy. And then they turn around and apply for one with their social security number. Yeah. Or they would apply with an EIN that was not a legitimate employer identification number.
Well, I think what's interesting, the hold codes, I don't have the percentages on this, but the hold codes were number one. We all knew what they were. The bank went ahead and funded them, even though they had the hold code. But there were all these other issues, a strange IP address. The loan had already their previous defaulted loans, employment ID numbers. So anyway, I think this is go ahead, Lance. Finish up.
I'm sorry, Bob. The defaulted category is more related to people who never applied for forgiveness. And I'm here to tell you, we sent numerous emails, numerous text messages, numerous phone calls to encourage PPP borrowers to apply for forgiveness. And there's some that just never did apply. Many people got the PPP loan funds and just forgot about it, I guess. But that also is a potential indicator of fraud. Somebody who got the money fraudulently certainly is not going to jump in and apply for forgiveness.
Yeah. And anyway, I thought it's interesting. We're going to attach this report. I think you can look at it. And this is, I thought this was interesting in terms of how borrowers commit fraud. And it's a nice little, this is one of the ways to pick it up.
Well,
go ahead, Lance.
Oh, I'm sorry, Bob. One final comment. When you look at PPP in 2020 versus 2021, There were a lot fewer suspicious emails, duplicate EINs. Yes, there was fraud in 2020, but most of your 2020 PPP loan recipients were financial institution customers, and they already
Right.
had already had the KYC information, had bank accounts with the customers, and there were fewer instances. When they opened it up to sole proprietor, Schedule C filers, that's when a lot of these fraudulent indicators popped up.
Challenge number 2 is we want to make sure we have good data to make sure that the small business set-asides are going to small business, that they're also going to women-owned businesses, that they and they said women-owned businesses are, and also the 8A program are subject to abuse. That doesn't affect us. It does affect you is if you're dealing with a contractor and they're applying for an SBA loan, make sure that they are it's just another check to make sure that there may not be issues for abuse. Then the challenge of IT, I'm not even going to address because it's always a challenge. And once they
Bob,
fix it, they got to do it all over again. Go ahead, Lance.
Let me throw some kudos out. The SBA loan forgiveness platform was a quality platform and worked very well for the loan forgiveness and the guarantee purchase process. And much of SBA's IT has gotten better. So they do face challenges, but they're getting better.
And as it evolves, once they fix it, then they're on to the next generation. But
where did SBA 1 go, Bob? No.
Moving, SBA has gone bye-bye. Hey, this is very important to all of us. Number 1, SBA's oversight of high-risk lending participants. In-person audits or reviews have not been planned. I know they're ramping that up this year. Lance, do you have a better feel for how much they're going to go back out in the field this year, or is it all going to be done desk?
I don't really have a feel for that, Bob. Everyone that I've talked to recently who's getting reviewed by SBA, it's been a desktop review, not an in-person review.
The next one's interesting. This is sort of a pet peeve for mine because risk by loan agents, this has been going on since I've been in the program, which is well over 30 years now. The good news, it's green. Yes, loan agents are a problem. They've never been able to figure out the database. Our advice to you is when you're dealing with a loan agent, vet them as you would a new hire. If you're going to hire somebody to be a BDO for your organization, you're going to vet them. Vet the loan agent the same way. I would encourage you to have that a loan agent broker, we're talking brokers, must be approved, and I would have a approval policy in your loan policy, how to approve loan brokers. Also, loan service providers, we certainly understand what happened with BankServe and the Cariaghi fiasco. But all the loan service providers that are left, I don't see any issues with them, Lance, and it is green.
We have seen more language in the SOP 5010s in the last several years related to loan agents and LSPs. Again, loan agents it's just like Bob said, if you properly vet them, they're fine. And LSPs, the vast majority of LSPs I'm aware of are doing great work in helping facilitate SBA lending.
The last thing and I think that's why that's green. And I believe the industry has a good handle on vetting their brokers. It's a lot easier to vet them and talk to them and understand what their knowledge is and where they're getting their business. I think that's very easy. Okay, challenge number 6. The next one, identification of improper payments. What this refers to, go ahead and move. There you go. What this refers to is the payment by the government to the lender for the guarantee. This is always going to be on the list.
Oh, it's even when I worked at SBA, Bob, IPURA reviews, which is an improper payment review, were a big issue and a big item. And this is when SBA pays the guarantee to a participant lender. They want SBA to come back and review a subset of that group and make sure the payments made to the participant lender were proper.
and that's always going to be an issue. And the reason why we bring it up is the requirements on the lenders will continue to be vetted thoroughly. Specifically, what they're looking at is they want their people to spend more time. They want to improve it. Lance, I could have read this 30 years ago. It would have been the same report. Improve its review of the loans, training loan specialists, and updating the loan review checklist. And this is what the Inspector General is telling SBA to do. Providing regular feedback to loan center management regarding improper payments. Well, that's fine. Internally evaluate purchase process and quality review. Conducting a training session at the loan center focused on the requirements and SBA review of documentation. And I like this one, providing training at lender conferences on the most common root causes of improper payment. And good for SBA. I think it's important that they get on a plane, they go to these conferences throughout the country, they meet with the Lance Sextons of the world who prepare these purchase packages, and they say, these are the mistakes we're finding, and more importantly, this is how to fix it at the underwriting and closing level. And that is valuable knowledge.
Well, the one thing I can tell you, Bob, on the guaranteed purchase side, which is where improper payments come from, I am seeing more questions and more follow-up on those guaranteed purchases submitted. Now, guys, I'm not seeing questions that I can't answer. I'm not seeing more difficult questions, but I'm seeing more follow-up from SBA on the guaranteed purchase packages after they're approved by SBA. So I think they're already implementing some of the processes that will help improve this.
Lance, do we still have a 2-tier of review? That is, if it's an express loan, it will be reviewed and viewed differently than if it's, say, $2 million and higher 7A loan.
Well, a lot of the improper payment reviews that you see, they're going to be done by the centers, and the centers are going to have to do a certain subset of the guarantee purchases made and do it in an peer review on those. So I think the reviews are going to be similar, Bob, irregardless of the size.
Oh, you see that moving in that direction. Real quick,
and the same thing. The SOP 5057-3 kind of telegraphs it for us when they came out with the new universal purchase package that is used on all guarantee purchases, irregardless of size.
I didn't plan it this way, but this is a great way to segue into Lance Sexton and Leslie's trip webinar next week. And I did not do this on purpose, but since we're here, Lance, what are you talking about? Just so happens, what are we talking about next Wednesday? Boy,
I think the wonderful thing is Leslie is involved with a company that does third-party lender reviews, loan portfolio reviews. And she has come up with a list of the 30 most common exceptions. And her and I are going to partner up and talk about those exceptions and what you as an SBA participant lender need to do to clear those exceptions. And it's very important information, and certainly it's not based on an SOP list. It's based on actual lender reviews. And the most common problems found in a loan portfolio review. So we're going to address those and try to share with you ways to take care of those.
Awesome. Good. It appears, and I'm going to make this statement, it appears we have solved our link issues. We see a number of people online, so on Teams. So that looks like that's working. We also are streaming it on YouTube, and you can also view, if you missed the shows on Monday and Friday, you can review it on YouTube at your leisure. Just type in YouTube Coleman Report, and there you are. Lance, thank you very much.
Oh, real. Bob, I want to let you know.
What's that noise I hear? That's Michael.
Bob, say hi to my University of Ozark students who I have tasked. I'm taking them through a small business lending class. I'm teaching SBA lending to seniors in accounting and finance, Bob, and they're supposed to be watching the show today. So say hi.
Well, I will say hi to them, but what is the University of Ozark's mascot?
Eagle. It's
Go Eagles. Go
yes.
Eagle or Eagles?
Eagles. Whatever.
All right. and you don't have the hook'em horns or the. All right.
Nothing.
Thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time. Go Eagles.
Have a great Monday. Thank you, Bob.